Alrighty, folks, we're going to talk about some bank stocks in this video, break down a bunch of charts, going over some banks here that I'm looking to trade in the midst of all the craziness going on with the regional banks. And we're not going to only talk about regional banks in this video because the large banks are also getting hit as well, which I think are a bit safer, especially here in the short term if you're looking to trade or maybe get a bounce back play, right? So if you all find value, of course, hit the like button, make sure to subscribe. Don't forget to get up to 17 stocks for MooMoo. More on that later. And of course, this is not financial advice. Please, guys, don't buy these stocks based on this video. Don't do anything based on this video. I'm just going over what I think and where I'm looking to maybe put some money in the short term as a trade to make some money in the short term. So let's just dive right into it, guys. Let's talk about what's going on. So first of all, regional banks. What the heck is a regional bank? So a regional bank is a mid-sized financial institution that typically has a large number of locations, often referred to as branches across a particular region, right? Think of First Republic, think of the other banks that went under, right, which we'll talk a little bit more about those in a little bit. Regional banks are typically larger, well, they are larger than community banks, which have less than $10 million worth of assets, but they're smaller than national or international money center banks. Think of JP Morgan, think of Wells Fargo, think of Bank of America, right? And regional banks offer many of the same customized services provided to consumers by community banks, but they also offer some of the convenience and flexibility of larger national and international banks. So, yeah, there you guys go. They're not as small as community banks, but of course they're not as large as the big boys out there. JP Morgan, Bank of America, Wells Fargo, and the list goes on. So now that you have a little idea of what a regional bank is, I'm sure a lot of you already knew that, but now that we covered that very quickly, let's take a look here at KRE, which is the Spider Regional Bank, S&P Regional Bank ETF, which this thing has been clobbered like you can imagine. The stock, or not, it's not a stock, guys, it's a basket of stocks. This ETF was at roughly $70 a couple months ago, 68.86 to be exact, back in the middle of August, and right now it is sitting at $45. And forget where it was in the middle of August, just about a month ago, in the middle of February, the stock, or there I go again, the ETF was at $64. So it's down $20 a share in the past month, which is a complete disaster. That is complete destruction at this point. Down 30%, again, $20 in the past month. And let me actually pull up the top holdings for KRE. Bear with me, guys. I actually don't have it pulled up here, but let's just see some of the top holdings in this ETF. Then we'll talk about the 5 stocks I'm looking at. So after a quick Google search, I'm seeing here some of the top 10 holdings right now are Regions Financial Corporation, PNC Financial Services, M&T Bank, Popular Inc., Fifth Third Bancorp, Webster Financial Corporation, East West Bancorp, and Synovus Financial Corporation. Those are a couple of their top holdings, and it seems like they are pretty diversified, 2-3% in each of these top holdings. So it's not like they're top heavy, like 30% in one bank or 20% in the other. So that means they're pretty much, all these banks are getting hit aggressively to bring down the entire ETF, right? That's kind of what's going on. So the way I'm looking at it here is you could take a risk on some of the regional banks out there that are getting destroyed. One in particular that I'm looking at very closely is FRC, which is First Republic, and when I'm filming this video, guys, it is down another 26% today. So it had a little rally, if you guys, well, little rally, more than just a little rally. It had a rally from $17.50, that was on Monday, I believe, rallied all the way to $40, then the next day, it got to the mid-50s. Now it's back to the low 20s. This is insane, guys. I was reading forums of people that got really excited. They were buying in the 30s, 40s on this rally. Yeah, now look at those people. I'm not calling anybody out, but I'm saying you got to be careful with the little dead cat bounces in these stocks because you can lose your shirt. We got the Credit Suisse situation that's panning out. That came out of, I don't want to say left field, but that kind of threw a wrench into these little rallies that we had in the bank stocks earlier this week, and now they're getting destroyed again. So keep in mind, these could easily see many rallies, then get hit on other, pieces of news that come out or more information on the existing stories, that are already out there. As more information arises, these rallies could disintegrate like that. You got to realize that. So First Republic Bank is more of a risky play, but it's one that I'm looking at for maybe it's kind of the most, I don't want to say the best risk reward, but there could be a lot of upside if this bank actually, of course, there's uncertainty right now. A lot of people think they're going to go under. If the bank doesn't go under, this could be a really good bounce back candidate. So now let's get into the ones that I'm looking at, some larger banks, some smaller banks out there. The first one that I'm looking at, guys, is USB, which is US Bancorp. Right now, and this is data, I think, based on the end of last year or early 2023. Either way, as of right now, US Bancorp, ticker symbol USB, is the 5th largest bank in the United States with total assets of just under $600 billion. We're talking $591.21 billion to be exact. And you guys can see this stock has gotten hit, right? Like all these bank stocks, some more than others. You guys know that. This one's down from $50 just about a month ago, roughly $50, to now $35 a share. That is a drop of 28%, almost 30%. And it doesn't seem like it is reversing. In fact, we actually took the lows out from the middle of October here. You guys can see on the 4-hour chart, we're well under those lows now from October. So this is definitely a bounce back candidate for me. And we can see now we're approaching the COVID lows, which on this bank stock were roughly at $30 to $31. And then we had that crazy run after COVID. The stock pretty much doubled up. So we're not going to dive into the fundamentals of all these banks. And I'm not even going to act like I'm a bank expert, like all the finance YouTubers are acting right now. I'm not a bank expert. I've said that time and time again throughout the history of this YouTube channel. I actually don't really invest in bank stocks individually. I'm looking at these mostly as a short-term bounce back type trade. Like I mentioned in the beginning of this video, these are not for long-term investments. I'm speculating that we're going to see some sort of bounce back in the short term. And I think, and really I'm picking these banks based on size, based on their asset value, and I'm pretty much betting on the bigger names to not fail, in other words. And I could get screwed, but I think these big boys out there, they're not going to fail. Like USB, some of the other ones we're going to talk about, they're quality banks that are just getting tied into the turmoil right now, and I think they'll make it through, right? And it doesn't take a bank expert to tell you that, and I'm not a dummy that knows nothing about banks, but I'm not an expert either. But to me, guys, I'm looking at this like it's a little bit overblown in the short term, and I'm not rushing and throwing all my money in it right now. I'm keeping these on the watch list, but I'm getting ideas, right? I'm formulating ideas, and I'm posting them here for you guys on YouTube, of course. So I think the bigger banks are going to be all right. Again, USB, the 5th largest bank, total assets of $591 billion. TD is another one, which I personally use TD Bank, and I think TD Bank is great for one of my checking accounts. Fantastic bank. The stock was at $70 a couple of months ago, really just 1 month ago. Now it's at $57. It is down 20%. It is in a bear market. And TD Bank, it's a Canadian-based bank, guys, but of course they have U.S. operations. They're the 9th largest bank with total assets of $394 billion. So they're a top 10 bank. Getting tied into this, sure, they could go under, but I highly doubt it, and they're down 20%. So this could easily be a bounce back candidate here, as it is now near the lows from the middle of October, also from the middle of July, and quite frankly, we took out both of those lows. But either way, this could be one of those that reverses, and it reverses pretty strongly, in my humble opinion, guys. So I'm watching Toronto Dominion Bank, another one that I'm looking at, which I got a lot of comments on. This is a great financial institution. It is Charles Schwab, which I'm kicking myself. I should have bought it in the 40s, but of course, shoulda, coulda, woulda, right? Now it's at $58. It's already rebounded a lot from the mid 40 low from earlier this week. It's up 34% as of now. And the funny thing is, as it's up 34%, it is still down from where it was a month ago, about the same amount, 25-30%. So it's still down a lot. There's still upside, more potential for upside here. And Charles Schwab is the 11th largest financial institution with total assets of $360 billion. So yeah, they're a pretty big institution. And of course, they deal heavily with investment banking, wealth management, investment, stuff like that. So or rather SCHW. I always screw up the ticker symbol. It is at the top of my watch list for financial institutions right now with how things are going. And before we talk about the next two, if you guys haven't gotten up to 17 free stocks yet, what are you doing? What are you waiting for? Use that link down below. You can get up to 17 free stocks from MooMoo, depending on how much money you deposit. Once you open up an account, you get 1 free share of stock right off the bat. If you deposit at least $100, you get 4 more free shares of stock, plus 2 shares of either ticker symbol AI or BBAI. And listen to this, on top of those 7 free stocks for depositing at least $100, you could also get another 10 stocks if you deposit at least $1,000, totaling 17 free stocks. And the great thing is, if you don't like the MooMoo platform, which I believe you will like the MooMoo platform, you can just take out all your money. Again, if you deposit at least $100, $1,000, and you get all those free stocks, you can just take out all your money and close your account, and you literally keep all the free stocks. But trust me, guys, you're going to like the MooMoo platform, so check it out, link down below. And with that being said, let's continue on. So the next bank I want to talk about, which is the smallest of all these banks that we're going to talk about, and it's probably in the same category in terms of risk as FRC, First Republic Bank. This is Key Bank, ticker symbol KEY, also known as Key Corp. This is down to $11.65 when I'm making this video, and it was just over $20 about a month and a half ago. So it's down over 40% in the past month and a half, and they're the 19th largest bank right now in the United States. And remember, when SVB went under, it was the 16th largest bank, so this is actually smaller than SVB, and their total assets are roughly $187 billion, which, I mean, that's still a lot of assets, right? But not nearly as much as U.S. Bank, TD, Charles Schwab, right? So this is one that is a regional bank, and it's, again, it carries a little bit more risk, due to contagion right now, and all these banks have a little bit of heightened risk, but I think the bigger banks, like I said, they're almost too big to fail. And now that we saw the Fed, they're pretty much guaranteeing deposits of all these different banks, or at least SVB, and they're probably going to guarantee to back the deposits of any bank that goes under. I feel like almost, again, the big banks are too big to fail. And even these smaller banks, I think they're going to get backstopped no matter what. And you could argue that, you could disagree with that, you could agree with that. It's just reality, at least in my opinion. So the way I'm looking at Key Corp here is, it's very oversold like a lot of these other ones. It's beaten down now to 3-year lows almost. The low from COVID was roughly $7.50, $8. We're almost there. I mean, this, in my opinion, is due for a sharp bounce back. And I'm not saying it's going to happen tomorrow, the next day. It might take a while, but over time, this will recover, in my humble opinion. Ticker symbol KEY. And the last one for the video, guys, make sure to smash that like button if you're still watching, is Bank of New York Mellon Corporation. This thing is down not nearly as much as the other banks, and that goes to show the strength of this bank stock. It is down only 15% in the past couple of weeks, which, again, some of the other ones are down 30%, 45%, over 50%. So they're the 12th largest bank right now in the United States, with total assets of $344 billion. And we can see the chart looks pretty decent, although it is under the moving averages, not the best sign. We do have a death cross. That's not the best sign either. We're still fighting to hold trend, it seems like, on this 1-year chart. You guys see that right here. Let me draw it out. And you could also see we're still above the major level of support, which is roughly $40 to $42. That's stemming back from about a year ago, from back in April of 2022. You guys can see we held 40 to 41. Then we had a huge run up to about 52. That was just recently, about a month and a half ago, right? So as long as we're holding above 40 to 45, I think the bulls have a fighting chance here on ticker symbol BK, Bank of New York Mellon. But the second we break under 40, this could be in for more downside. And mind you, we're not getting the full-on reversal quite yet. I'm going to set my alert at $40. Mark is at or below. And we're not getting the full-on reversal on any of these banks. You got to realize that. You got to keep that in your mind. As of now, we're still in a downtrend on the hourly chart, which is what I'm watching in the short term for a confirmation of reversal. And we're still in a downtrend on pretty much all these, right? U.S. Bank on the 20-day chart, still in a downtrend. TD Bank, still in a downtrend. Charles Schwab, you guessed it, still in a downtrend, and of course KeyBank, which we just covered. So those are a couple of stocks that I'm looking at here for bank stocks for a short-term trade. Let me say that again, for a short-term trade. So keep that in mind, guys, and please don't buy any of these based on this video. Don't do anything based on these on this video for that matter in terms of buying or selling stocks. You guys got to do your own research. And with that being said, I'm going to wrap it up. If you enjoyed it, hit the like button. Make sure to subscribe. Don't forget to get up to 17 stocks from MooMoo using that link down below. And look, I just got my alert for AMAT. We'll take a look at that after this. Don't forget to get those free stocks. Open up an account. You get 1 free share of stock. Deposit at least $100. You get 6 more free shares of stock. And if you deposit at least $1,000, you get another 10 stocks, totaling 17 free stocks. And if you guys want to be a part of the community, join the Patreon. That's linked down below. I'm posting all my buys and sells. Well, there's no sells, but I'm posting all my buys in the Patreon portfolio on there. I'm posting all my charts, my thoughts throughout the day. So if you want to be a part of the Patreon, check out that link down below. And with that being said, I'll catch you guys later.